Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Friday. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Dennis Dick with you. Got a lot to talk about today. We have some earnings, Overstock, Lionsgate, Dropbox, the Trade Desk, OLED, Planet Fitness. A lot of ratings following through from just the reports from the week. We're going to talk about Turkey, kind of the fears there kind of spreading to the European banks overnight. We're going to talk about Tesla being stuck in a trading range. And as always, we'll take your questions from our chat, premarket.benzinga.com and youtube.com/BenzingaTV. You can see I've got the charts of the spiders up on the screen. We are down a little bit in the pre-market session. Dennis, how is your morning going?
Going pretty good. A little sell-off here this morning. I think you're right. I think the catalyst here is our friends over in Turkey. Obviously, some concerns here this morning that, well, give us the concerns, Spencer. I won't take your headline away.
There's been some inflationary concerns now for a while. If you've been reading the news at all this week, you've seen the story that the lira is at all-time lows against the dollar. Yesterday, though, the ECB did say they're going to take a look at how much exposure to Turkey the European banks have, and I think that I'm not sure who decides when contagion is taking place, but whoever decides that, maybe it's the ECB, that's the fear this morning. So the fear is that contagion is happening. It's going to spread. This inflation will spread to other markets, other countries, other assets, and so that is kind of what's hitting us this morning.
I mean, they've got some major problems over there, and Fuzzy bringing it up. Bring up the TUR on the chart, and this is just awful looking here in the last 4 months. So Turkey TUR, $45 back in February, your Turkey ETF. It's down another 10% this morning. It's trading at $22 here. So this is quietly in 2018 lost over 50%. This is an ETF that invests obviously in Turkey. So you can tell there's major problems over there. It is starting to spill over into the European banks here. We've talked about European bank problems before. They've been pretty good for the last couple of months, but they're starting to look ugly here again. Even uglier for Deutsche Bank, not only obviously Turkey exposure, but also they're getting downgraded this morning to the equivalent of sell, underweight at Morgan Stanley. That's why if you look at DB, it's down 5% this morning, really getting hit. But if you bring up all the European banks, Credit Suisse down 1.5%. RBS down 1.3%. You can go to ING is trading down 4.5% here this morning. Barclays BCS down 1.5%. I think I might have said that one. Banco Santander SAN down 2.79%. So we got a mess over in Europe here this morning, and that is why our markets are trading down as well. And if you look at our banks, our U.S. banks often do get nervous when the European banks start to really show some weakness. Our banks are trading down significantly as well. Double whammy for our banks because the TLT is trading significantly higher. So we know that is bad for the banks as well. So Bank of America trading down 1.5%, Citigroup down 1.2%, JP Morgan down 1.2%, Goldman Sachs down 0.76%, Morgan Stanley down 1%, Wells Fargo down 1.6%. That's a lot of information in a short period of time. And we just gave you about 20 stocks, but you can just get the theme here is financials are weak.
Yeah, BNP Paribas, Spain's BBVA are seen as among the most exposed to Turkey. So just watch out for your emerging markets, all your international equities, quite frankly. And China is its own other beast, but it seems like that's going to be the driver today. Do you want to talk about China, Dennis? Because I know they're on your mind a little bit while we're overseas here. Can't seem to catch a bid anywhere. JD.com is going to report earnings next week. I want to say it's Tuesday. Let me confirm that real quickly. The 16th before the bell, so whatever day that is. But,
it's trying to hold on to that support level. JD absolutely needs to hold 34.76 level there. It got down to 34.88 back in April. In June, 34.76. Recently, we have bottomed right in that area, 34.86, 34.90. So support is very well defined on here. It's hung out for so long that it makes me feel like it's heavy and going to take it out. But that being said, it all matters is earnings, and earnings is going to take the front seat. Technicals will take a back seat. So if they blow it away and raise guidance, the stock will go higher. But I tend to think the technicals are trying to tell us that they might not perform that well here. So be very cautious, trading this off support, especially going into earnings. But the big guns too over there, Alibaba down for 4 days in a row here, can't seem to catch a bid. Baidu has its own problem with Goldman obviously coming into their space, but all of the other smaller Chinese plays really can't catch a bid either. We talked about it a couple of days ago with Weibo, had a good report. WB was up $5 in the pre-market and within an hour gave it all back. So you can just see there is just an eternal seller there right now, it seems like, in Chinese stocks. So until the tide turns, I guess rallies to be sold here on the China stocks. It will turn. It will turn again. But as of right now, investors don't seem to want to own the Chinese stocks.
All right, let's shift back over to domestic equities, and let's go to, where should we start? I guess let's go to where?
I'm going to go Dropbox.
Okay.
I think you got to go Dropbox.
I was going to go there or Overstock. So we'll go to
Dropbox. Yeah, those are the two big ones. So go Dropbox. Show the after hours chart too, because this one was a wild child. Anyways, give us the numbers and show us that after hours chart.
All right, charts up. Dropbox reports Q2 EPS 11 cents versus a 6-cent estimate. Sales of $339 versus $331 million. They gave some guidance on the conference call. Q3 sales guidance coming in higher than the estimate. 350 to 353 million is the range they gave. 345.9 was the estimate on that. What else do we have this morning? Some follow-through rating changes. RBC's upgrading Dropbox to outperform from neutral. And they also said Dropbox did that the lockup period is originally scheduled for September 18th related to the IPO. And I think now it's August 23rd. So they moved up the end of the lockup period.
I mean, I look here, and this had a wild after-hours trading. Again, I'm just going to reiterate what I've been saying, is if you've got options on this, you got to be trading them and taking advantage of that after-hours movement. This get over $37. What's the high last night?
That's a good question. Let me check.
I thought I saw $37 on this.
I prefer, for looking at my highs and lows, I just prefer looking at, Thinkorswim, 37.12.
So it's got up and it was over 3 points last night. It was trading higher there, and then they just pulled the rug out from under it, and it just kept going down. So it's selling the rip on this thing. I mean, the overhead supply comes into favor too, or comes into play here too. So it becomes difficult here now. I mean, if you think this is going to bounce right back, it becomes more difficult because of what's happened here. It had a nice run up after hours. All those people are burned. Everybody who bought this thing on the news algos who bought this thing on the initial headline are burned. Everybody who bought it as it was coming down are burned. There's a lot of people, short-term traders, burned here right now. What I mean by burned is, there was obviously traders that bought it up there. All those traders, there's still that mentality. A lot of traders don't like to take losses. So as it comes back into 34, 35, 36, you got all kinds of people trying to unload the stock that they just loaded up. So now it's at 31.60. These people are in trouble. Eventually they may stop out. I think this thing could continue to leak here today. So it's down 8% here. I was a little bearish actually a few days ago here. Egg on my shirt because I did not see that big run up coming ahead into the earnings. I guess I should have, because I always say they run up ahead of the report. And if I would have been buying Dropbox just ahead of the report, the classic strategy that we talk about there, you could have taken 2-3 points out of it yesterday. But it's given it all back here this morning, trading 31.60. I guess you can look at the old 30 and say, well, that's support until it's broken. But this earnings reaction to these numbers is not great.
I mean, just look at that daily chart since the IPO at the end of March there. I mean, it ran up to the all-time high. What was that? June 18th, 43.50, and just gave it all back. So we're 30.
I mean, the volatility on these earnings reports makes me almost want to own options. Like be a buyer of options just to trade the volatility without, with a little less risk. Because, like I said, if you had the 35 calls last night, you could have thrown it out there at 36.5, 37 short. Trade against the calls, probably locked in some gains. I don't think the calls were going for $1.50. Maybe they were. I didn't, go and price them actually, so maybe you wouldn't have made that much on that. But if you would short it, and then obviously hindsight's 20/20. But I mean, it can come back in. Just the wild oscillations we seem to see on these earnings reports. Really, if you've got options, open option positions, you can really take advantage of that. We saw it in Snap a couple of days ago. This Dropbox, the same story, 3 points up, 3 points down. I mean, just wild money being made if you're on the right side of it. And when you have the open option positions, like let's say you had 34 calls, you can sit out there and sell at 37 short, lock in 3 points on your calls, And now if it comes back down through 34, you don't have to exercise your calls. It goes 33, 32, 31. All of a sudden, you're just up 6 points on that short you put on, and you just buy the stock back. So that's how you can make a lot of money on those options, by trading the stock against them after hours. But if you just sit there and let it die on the vine, sometimes, like the 34 call buyer here, the 35 call buyer, the 33 or the 32, that could have been selling last night and making money, not selling their options, but selling short the stock against their calls and locking it in, is now sitting with a zero. So I think if you're buying calls and puts, I'm not saying to go and do that. I typically don't, because I don't like paying the premiums. But if you are, I think you got to take advantage of that after hours action.
Question from the YouTube chat that we tend to get every so often: how do you gauge the amount of overhead supply?
You know what? It's feel to a certain extent. You look at the chart, first of all. Has the stock been up here before? If it's never been up here, stock's making new all-time highs. That's why I love buying stocks that are making new all-time highs, because there is no overhead supply up there, because it's never been up there before. The only people who are getting burned on the stock right now is potential shorts when stock's making new all-time highs. But when a stock's been up there before, and it's traded up there for a while, I'm not saying just spiked up there for like 1 minute and came back down. When it's traded up there for a while, we know Dropbox traded up there June, July, so people really got burned chasing that move. 35, 37, 40, 42. As it gets back up there, even for the brief moment of time that it did last night, there's people who are locked and loaded and saying, yes, I can get my money back, sell, sell, sell. And that's what I mean by overhead supply, because it's been up there before and there has been people burned, came down quickly, so a lot of people maybe didn't get out back in June. There's still going to be some of those sellers back up there. That's what I mean by overhead supply. Same thing with underneath demand. And nobody talks about underneath demand, but me and Joel do on the show. And that would just be the opposite case, where you've had a stock that, is really sold off hard and now rallied. And now you've got some people who maybe were short it. Maybe, they're looking, to cover in, and they're going to, be buyers. I would think in this case, a great example of potential underneath demand might be Tesla. It's trading in the red here now, but you probably got some nervous shorts here, because we got some news after hours last night. And if you want to, do you want to give the headline here, Spencer, from CNBC?
Just that the board is meeting to discuss a potential conclusion to this go private business.
So the board's having a meeting. Obviously, the market thinks there's going to be nothing to come of it. And that might be the case. I mean, that's your headline risk here. So I look at it here, and I think if I was short the stock, though, and it came back down, this is where the stock was trading prior to any news about the 420. It was trading right around here, 349, 350 after the good earnings report. I would bet you get down near 340. I bet you got some nervous shorts saying, well, what if a 420 does come to fruition? I'd be losing another 80 points here. I'm willing to cover. So I think in this case, you actually got some underneath demand around 340. So it's down $3 here right now. It's not great news that they announced last night, and it went up after hours on that news that they were even going to try to, not include Musk in the discussion of a potential 420. I don't know how they can do that, if they can do it, but I think with everything going on, SEC investigation into his Twitter comments now, I think they're trying to keep Musk, what the board's trying, they're going to try their best to keep him out of the discussion for this for now. But, it's going to be driven by headlines. But all I'm saying is, if, the 420 is off the table, it probably goes below 340, because now you've got a lot of people, who are going to be riding the short thesis. And, we've got a potential SEC investigation into his comments. There's some other concerns there now all of a sudden that wasn't there before. But I think when you get, if we don't get any headlines, and headlines are going to drive it, I think you do have a potential area to balance at 340, because I think there's some people who are short this thing that could be nervous that 420 could come to fruition.
All right. I want to get to one more earnings, and then there's some stuff in the chat I'd like to get to. But Overstock, while my computer freezes up on me, they had earnings yesterday, and that is one headline. The other headline, though, is that they got an investment into T0, which is their blockchain product that values T0 at $1 billion. So the earnings from Overstock, Q2 EPS, $2.20 loss, not comparable to the 82-cent loss estimate. Sales more comparable, 483 million versus 474. And I mentioned that big investment from GSR Capital into T0. Again, that values the blockchain product at $1 billion. Also, they had a $150 million common stock offering.
Lots of news here. What's the short interest on this? Can you just hunt that down while I give some commentary? Because I think it's quite high.
Probably high.
Stock trading up 20%. So I was watching this trading off the action. They gave the earnings. It got a nice lift. Then they came out with that investment, and it really lifted. That's when it ripped. And if you show the after hours chart, you can just see the rip. But I think it got up to where to get $48 or something. It was high. Yeah, over 48 it got last night on that rip. Then it came in a little bit. Then they announced the offering, which, it's funny, if stock's up, we better do an offering to lock in some of this money for ourselves. It's always interesting. You can tell the companies that need money because when their stocks rip, they do an offering right away. Anyways, they're doing 150 million, not a huge offering, and it didn't knock it down that much, but it knocked it down $1 or $2 from where it was, and it's starting to lift here now again. I mean, it's about shorts here too. If the shorts are in this thing and they're looking at these headlines,
they're in it. They're in this thing. 46%.
Hard for stocks to go down when the short interest is that high. I mean, that's one thing. When you are looking, and just doing your initial homework on whether you're going to buy or sell or short a stock, one of the first things I look at is short interest. When you see it at 46%, it's like any headline that is going to be bullish for the stock is going to be very magnified, meaning it's going to go up a lot more because you got nervous shorts in there. And if it's 46%, that is enormous. So it's not surprising that the stock's up 21% on this news. Is the news going to change everything for this stock? Is this company going to go and is this do I want to throw this in my investment portfolio right away? No, I'm not chasing stocks in this environment. This is not, again, I'm going to keep saying it. This 2018 year has not been the year to chase stocks. If you've been chasing, you've been getting burned left, right, and center, because even looking just to the SPY, which is obviously gauged for the top 500 stocks on the S&P, I mean, really in 2018, it's been the year of chop. We got killed in January, we rallied all the way back in February, March, then we got killed again in April, then we rallied back in the summer, then we got a little beat up in June again. Now we've been rallying back up, we're back up the all-time highs. I mean, there's a trend from April that's still up here. I do eventually think we make all-time highs, but I mean, it has been a chop fest, and it has not been an easy ride. And even on individual stocks, it has not been an easy ride. There's been a lot of chop all over the place there. So just consider that, when you're buying something that's ripping 21%, remember that there's been a lot of chop this year. And just because something's up 21%, yes, it might continue today, get the momentum going. I think it could test 50 today, but I'm not coming in here and chasing at this point, not with investment dollars. As a trade, you can do anything. Just make sure you have an out.
All right, there's or actually a couple from the chat I want to get to. First, let's go to Cort, C-O-R-T, Corcept Therapeutics. They had earnings yesterday. They weren't good. They missed on the EPS and they missed on the sales number. They also, on the conference call, lowered their guidance. I'll just read the numbers they gave on the call. They lowered their fiscal year revenue guidance from 275 to $300 million. They guided lower by $25 million. Also, some color that we're getting in the YouTube chat, if I could find that real quickly. I think Abner's Boy says they're stuck in litigation over a treatment for Cushing syndrome. So regardless, a lot of headlines here, but they missed on the earnings. They lowered their guidance. You don't want to see that. Can you give us some thoughts?
I don't follow the story at all. And these things are such headline stocks there. I mean, you can give some technical levels, and it's been a long time. We haven't been down this level since 2017. I mean, there was a stock yesterday that I felt was similar, that it was down it was $14 and down to 11. And I said, this thing could see $10. I don't even remember what that stock was yesterday. I don't know if anybody else does. Anyways, it's in the doghouse. I'm not following the story close enough to really say if this is going to bounce back or not. But all I know is, it seems like, at least on that day when the ball gets going in one direction, it's hard to turn it around. So the bounce trade has always been more difficult. It's taken out all lows from the year of 1250. And when stocks are making new lows, I always say you got to go. So I don't want any part of this from the long side. All right, maybe it bounces, but that's hard money to make.
Let's go to the chippers because they're all moving this morning.
Big time microchip.
Yeah, I'll start with MCHP. They reported after the bell yesterday. Q1 EPS $1.61 versus $1.48 estimate. Sales $1.2 billion is in line with the estimate there. The Q2 guidance, EPS guidance coming in line. Sales guidance coming in a little bit light.
Just go back 1 second before we go to the chips, because Chili Trader said it was ELF, and look at that. So it was 11.50 yesterday in the pre-market, and I was like, these things, when they go in one direction, they can continue going down. And I think I said on the show that it could see $10. It actually did. It went down to 9.30. So it just goes to show you, if you're coming in and buying these stocks that are on disappointing results, it's often been a mistake, because they often, when the real sellers coming after 9.30, there's more of them more institutions dumping, and you see this thing. And now, when a stock goes from 14 to 11, it often goes to 10. I don't know why it is. They just always seem to want to go down and get under single digits, at least to hit some stops down there. So that's just going back to the stock that we were just talking about, which I've already forgotten the symbol, CORT.
Yeah.
So 1160. I mean, if it's fallen, nothing to do with Elf Beauty. It's all just to do with technicals.
Right.
Stocks that are out of favor and stocks that are making new lows on moves tend to like to get down to single digits when they get that close. I mean, it's still a long ways away, but if it follows Elf Beauty at all from yesterday, it could see $10 too. So not saying it's gonna for sure, just saying you've got to be set up for these scenarios. Right. So microchip. So this report hit all the chip stocks. Last night, every single chip stock's trading lower. I mean, we can look at Texas Instruments, getting the beats here this morning. Applied Materials, getting the beats here. Lam Research, getting the beats here. It's down 1.5%. Intel's getting the beats, but it's got the double whammy here because Goldman downgraded to sell today too. So it was already getting the beats. Now it's getting the beats more. AMD was getting the beats last night as well, but it got upgraded by Goldman Sachs here today. So it's actually slightly in the green here. If there wasn't this microchip disaster, AMD would probably be higher. You can look at NVIDIA, it's down 1.5% as well. So you got a lot of chip stocks that are taking it on the chin. I would say the majority of your losses here today are because of the financials and the chips.
And we just kind of ran through the entire
chip
sector.
So
Wait,
if you see any stock you want to talk about in there, let me know. Microchip, I will just say $90 has been a pretty big level for it. It got down there in June and early July. It breached it by going down to 89.20. I look at that area as the first potential bounce area, but these stocks have not been that much in favor here. I mean, as of late. I mean, look at Lam Research. It's had the nice bounce, off their earnings reports here, but it's already started to leak. It's almost given back the majority of their gain from their earnings report. Applied Materials had a nice run back too. It often moves with Lam Research, $46 up to 50, kind of failed at 50. Now we're back here 48.5. Really, you look at some of these, and besides AMD, which has been a monster, a lot of these other stocks, even NVIDIA. I mean, talk about NVIDIA. Here's a stock that was so loved in 2017, could not stop going up. Well, NVIDIA started the year around 250. We are still right there at 250. So, despite the S&Ps, well, the S&Ps haven't gone very far either. But I mean, despite being so loved last year, NVIDIA's had a quiet year here. It's really not come back at all. So, or it's really not, rallied here at all with the overall, with any other stocks there. So it's interesting. The chips have underperformed.
And NVIDIA reports Thursday after the close. So
that's going to be big. And it's a sleepy one. So who knows here? NVIDIA usually tends to really blow it away. And maybe the market's going to want to see that. So it's coming next week. I would look at NVIDIA last time before NVIDIA reported. And I think this is where the easier money is. It ran up for 3 straight days. It ran up 30 points ahead of the report. So I'm actually thinking, Monday, Tuesday, depending on what the market does, I might actually take a flyer, buying it 2-3 days ahead of the report, and then selling it before it reports and seeing if we get that pre-earnings run up that we've seen in a lot of different stocks.
So that was that gap right here on the chart. That was May 10th, and that's what that gap up was. That was the earnings gap. All right, let's move on to what else did I have on my list here? You want to move on to Lionsgate? You want to go there?
Yeah, we can go Lionsgate. Let's do it.
Lionsgate, always confusing with these stocks with 2 share classes, but I
don't know why all the media stocks do that. Viacom, Lionsgate, Discovery, CBS, they all want to have more than one share class. So LGF.A, LGF.B, both fairly traded with some volume there, so you can kind of pick your poison or pick your, actually it's good today. LGF.A, let's go.
The Q2 EPS 18 cents. I don't know if there was an estimate on that. Sales 932 versus $886 million, a beat on the sales figure, and you can see some
it was a beat and a beat. I saw that last night. And it was trading higher. The .B got all the way up to 24 just on light volume here. I think, and I was hoping this one would actually miss because I wanted to get a shot buying it at 21 or 22 in my investment portfolio. Remember the rumors back, that Lionsgate could potentially be an acquisition. I think it's still there. So I like Lionsgate. I'm not going to chase it because it's giving you lots of chances. I don't want to chase it up $1 here today on earnings. But if it gets back down the 23 area, I might take a shot at it as a little longer term investment there. I've still got my AMCX, and we saw AMCX got hit on their initial report and bounced right back. Viacom on their report yesterday actually showed some weakness early in the pre-market. It was actually trading down and then turned around and they just bought the hell out of it. So this is going to be up already today. I don't know if you're going to get a chance. It's going to trade up 70, 80 cents here. It looks like at least off the bat. But if it pulls back in the 23 area, I might take a shot on this. And the potential, it's got a little dividend, 1.56%, but just the outside, potential too that this could be in play. I think that keeps some, I think there's underneath demand for that reason because the stock, it might come back up in the content plays, and right now that's out of the news because the Fox Disney thing is done. But I think content is still king. I think going forward, you could see some more M&A action in these sectors, and this would be a target. So I still like Lionsgate down here. Back at 27, when everybody was buying it thinking it was an M&A play, that was chasing and people got burned. But now you come back to this area where it was before, and there's not as much risk down here now. So, from a fundamental perspective, the company's not, that bad here at 23 either. So I kind of like this one as a longer-term investment if I can get in the lower 23s.
All right, I'm going to move on to Planet Fitness. PLNT reported after the bell. Q2 adjusted EPS 34 cents has a 3-cent beat. Sales of 140.6 versus $131 million. Nice Q2 report there. Comps up 10% on a year-over-year basis. Nice. They announced a $500 million buyback program, or an increase to the program by $500 million. Fiscal year sales growth are around 26%. Comps for the year up between 9 and 10%. Those are all good numbers.
Those are big numbers. It's competitive within the gyms. Have you been into a Planet Fitness before? I've never been to one.
I have. I'm actually considering joining one just for the winter months.
Which one would you join if you were to join? Who's local to you? Who do you got around you?
Yeah, there's one that's around the corner from where I live, and I run outside, and I don't want to run in the snow, so I'm thinking for the winter months, I'll just hop in there for a few months. But
I started running too. You ever try that Strava app?
I use Nike.
Yeah, Nike. There's an app called Strava where you can link in all of your different watches. So
I'm all connected. I got the Fitbit. I got the Nike app. I'm
get on the Strava, and then I can watch you run. Anybody else too? I'm on Strava as well. So I started running about 2 months ago. How far do you run when you go?
I don't need you people judging me for
I don't want anybody to. I don't know. I've got all my friends. We all kind of just bug each other. So if I don't run for 2 or 3 days, then I got another buddy, it's going to. I just started running 2 months ago. I got up to 215 pounds, and I was like, okay, I got to start doing something about this because this is getting out of hand. This is the heaviest I've ever been at 215. So I'm down to 206 now. So I pulled it back a little bit here in the last couple of months. I run 3 times a week, and I'm trying to run a minimum of 5K every time I run. Right. So 5K is 3 miles.
So 215 would be the support, right? Then because
that's resistance.
No, it's support because you don't want to get above. Because it's
I don't want to get above there. Yeah, I don't want to break out there. But I've got
higher is bad.
I have not been below 200 pounds since I got married 13 years ago.
All right.
So 200 is major support for me on my weight.
All right.
Anyways, but we digress once again.
Planet Fitness
PLNT is in a nice uptrend. People still care about their health.
Yeah.
I feel like you're chasing it a bit. A year and a half ago it was $20. Now it's $50. So I feel like if you're coming in now, you're late to the party. But it's trend's your friend. As a trade here, draw take your Jeff Mackey purple crayon, draw your line there, and pulls back that support area. That's where you buy. And that stuff works. And Jeff Mackey, we'll give you a shout out there. I know you listen every once in a while, but purple crayon, that's Jeff Mackey patented trick. And I tell you, one of the best technical traders out there is that purple crayon.
Oh, we're getting some people in the chat that are on Strava as well. I don't need anyone judging me for how far or not far.
Follow me on Strava.
Okay, I will check it out this weekend. How about that? Okay. Let's move on to TTD, the trade desk. They also had earnings yesterday after the bell. The Q2 EPS there, 60 cents versus a 44-cent estimate. Sales of 112 versus 104 million dollars, raising their guidance for the fiscal year. Sales guidance from $433 million to at least $456 million. So that's a $23 million increase. Q3 sales guidance, $116 million versus $109 million estimate. So all good things coming out of TTD.
There has been no stock that has been hotter than Trade Desk, I think. I feel like this year, it's the stock just keeps going higher and higher and higher and higher. It started the year around $50, got up to 93 ahead of the report. Now 100. We're talking now $113. It's a huge move. Now you're definitely late to the party if you're coming in here. But again, same thing. There's underneath demand on this thing, it seems like. So I'm not coming here buying any stock up 21% because it seems like that's a good way to get burned here, chasing a stock up that much. But holy cow, it's an impressive move, and the stock has been so impressive there. And even in the after-hours session, it's just continued to climb. So what exactly, I look at Trade Desk, what exactly do they do? It's advertising. What the hell else is it?
Well, I just wanted to point out before I answer your question, look at that gap up in May. They raised their guidance in May. They raised their
Well, I know. It's just hot right now.
They raised the guidance last quarter.
So I'm at their website here, the Trade Desk. I'm looking. The website's not even that easy because usually they have what they do here. A whole bunch of products.
It's a digital ad platform. So
digital ads.
Companies.
Digital age, digital ads. The hot story.
Yeah, so it's basically like the way you would, for example, advertise on Google or advertise on Facebook. You would use them for how you go about doing that. That's how I understand it anyway. All right, 8:31, Dennis.
CPI.
Oh, CPI's out. I wasn't even paying attention.
Brentster will be. Brentster. He's
CPI for July, 0.2% in line with the estimate. That was also the prior reading. That's the
stopping around a little bit here, not getting much movement. I often like to go look at the TLT because sometimes it'll move, but it's crickets there off this number. We're already weak. We're already weak off Turkey and the European bank situation here this morning, and I don't think we're bouncing right back because of that. TLT is just showing a little bit of strength there. It's always interesting too. I mean, you look here and you think, here we got some concerns. Maybe gold's going to catch some life. Gold just never seems to be able to catch a bit. Like, we haven't talked about gold or silver for a while on the show, but holy cow. I mean, I guess we've never had any major concerns here in a while, but it's, even when you get a day like this, you'd think, okay, well, here's some concerns. Gold's going to catch a bit. I mean, GLD's up 8 cents. Hard to be an investor in something when it's supposed to play defense and it's not playing defense.
Well, when you're at all-time highs, I guess that'll do it. I don't know.
Yeah, well, I mean, if you look at the market overall, I'm just saying, I used to see it when you'd get concerns overseas, Deutsche Bank, or you got, Turkey, and you got some major issues. You see gold catch a 1% bid that day. It's not catching a bid here at all. So I'm actually surprised that it's not bid up a little bit here this morning, but that just shows you this market's just not that nervous.
All right, let's talk about Redfin. Someone in the chat mentioned Redfin. Yeah, this one is interesting. So they did report yesterday after the close. The Q2 numbers were good. This one is just getting murdered though. So the Q2 EPS 6 cents versus a 2 cent estimate. Sales 142.6 versus 138.8 million. So beats on the Q2 numbers. Q3 net income 1.2 to 2.8 million. Sales guidance again for Q3 137 to 141 million dollars. That's a little bit light. 141 was the estimate. So I guess light on the Q3 sales guidance, but damn.
It's getting really beat up here this morning. It's down through $20 support. I was going to say you do have some levels. We go down to 2018. We got down to 1918 back in February. We got down to 1940 and 1937. So you're coming into that area. And if you look even back to 2017 when it first came out, it was 1930 as well. So this is it. I mean, 1930 is the line in the sand because it's never been lower than 1918. So 1918 is the absolute line in the sand that it needs to hold. It starts going below that. Then you got stocks making new all-time lows. And what do I say? Stock making new all-time low.
You're not.
You gotta go.
Yeah,
you don't own it. So that's what I say, in my opinion. I don't like owning stocks that are making new all-time lows. So it needs to hold 1918. Can it hold? Maybe. It's been down here before. It's down 16%. Maybe that's going to get an initial bounce off that area here, but it's not a good sign. What did it do after hours? I haven't looked at the after hours chart.
Oh, let's pull it up.
Bring it up. We've been below 1918. We are challenging it right now.
Oh, yeah. We were at, what is the low? The low is 1870. We're not there. We're at 19.
In that vicinity. So call it all 19. I mean, sometimes you got to give it a little bit of wiggle room. You don't want to go 1918 and then the low is 1910 and you get stopped out. It can't be a perfect, you got to give it some room. But, I mean, we bounced. So we have bounced a little bit from that initial spike through the 19. You have a little green candle there. I mean, that's where it's got to hold. So I would say the pre-market low is probably my stop out now. What is a pre-market low?
1870?
Say 1870. So you got to give it some wiggle room. If I was long the thing, that would be my stop out here now, 1870. Below 1870, could just open up and could just get ugly. So it's already ugly here today. And you think, how ugly can it get? Well, ugly stocks are down. Stocks I've learned that go down 15% often go down 25%. So you got to be careful on Redfin. But we do have some good support. So that's the one case the bulls still have is you are coming into support.
All right.
835 is no guess, I believe.
Nope,
today.
no
But
guess.
we do have some imbalances to talk about
Okay,
here.
let's
So
go.
Pfizer's consistently been a sell imbalance every day. Pfizer has 125,000 to sell. It seems like it shrugs it off because by the end of the day, it always seems to go higher. Anyways, Baba 52,000 to sell. General Electric, I think every single day I talk about 153,000 to sell. I don't remember the last time I saw an opening buy imbalance in General Electric. Let's go to the European banks and just see what's happening there. Yeah, Deutsche Bank 14,000 to sell. You got UBS a little bit, Barclays. They're all to the sell side. They're all weaker as well. Bob at 52,000 to sell. I mean, they're all selling balances and they're all fairly small. Taiwan Semiconductor is a big one, 81,000 to sell in TSM. Obviously, that's getting hit on the chip wreck here too this morning. And Taiwan Semiconductor is offered down at 41.50, looking 41.10 bids. So it's looking weak here this morning too. Chip stock still under pressure.
All right. What else was on your list to discuss? Because I
wanted to go back to Tesla and just we did talk about it, but I just want to talk about the range bound it's been. We didn't really talk, my specific. Or did we kind of did, but I just think you kind of got the situation here with Tesla, and it's bouncing around a lot this morning. The CNBC headline, but it's kind of feels like at 380. It feels like, okay, I want to be short the stock. But at 340, 350, it's like I almost feel like I want to be long it. And until you get a headline saying, okay, there's no deal, no deal, probably knock it down to like 320 or 330 now. But until you get like some, headline here, I think if, you've got people, because right now, if you look at it, what if there is a 420? Like think about, what the market's thinking. Well, that's 70 points higher. So at 352, it starts to become attractive. If there's a 420 offer and it's trading at 380, well, it's only 40 points higher. So your risk reward is not nearly as great there. So I think this thing stays range bound until we get a confirmation headline on whether there's a 420 offer or not. So I think you find support between 340 and 350. I think you find resistance up between 370 and 380. I think we stay range bound within that range until we have some news either, saying there is a 420 deal going to happen or there isn't. So I think Tesla, play the range is what I'm kind of saying here, in my opinion.
All right. A lot of stocks getting thrown around in the chat, so let's kind of
let's go chat day for stocks.
Let's run through them.
Today. And we can start taking stocks from the chat.
And I'm going to start from the older one. So someone mentioned Alibaba a while ago, and they asked about Alibaba as an investment. I mean, we're not going to give investment advice, but just by looking at the chart here, I mean, we've been talking about how weak China has been. Now for a while, but just kind of give your overall thoughts on Alibaba.
I mean, it's still a good story. And if you're buying 175 here and sticking in your long-term investment portfolio, I think you'd be happy you did it, 6 months or a year from now. I think you might get it cheaper, though. We've come a long ways from the 210, and we had all those lows back in May, a 165, 166, 168. So we've come a long ways not to test that support area. So I look at Alibaba and think, I think I got another 7 points. I think I can get it cheaper. So just my opinion, but I think if you're coming in, I think you're a little early. I think you'll still be okay here. I still think when I look at this thing a year from now, I think it could be over $200 again, obviously, depending on what the market's doing overall. But if we're staying in this bull market, I think Alibaba will come back. I just think you might get a shot here at 167 to 168. So if I'm buying this thing, I'm probably putting my order out at 167, 168, my longer term orders.
And then we had a question about Wynn. Haven't talked about the casinos in a while.
A little while. They had a nice pop just a couple of weeks ago there, and then they dropped. So you saw, even looking at MGM, when they all had a nice little run up in July, and then they all got annihilated here. What was the news? It was earnings on Wynn. Yeah. They must have all had earnings. Las Vegas Sands was down on their report, and then MGM got annihilated as well. So they've kind of bounced back, but you look at these charts, and they all kind of are still in downtrends, and they all look broken. So, classic technical analysis just says you sell the bounce. And, so here I'm looking, if you're coming in here, could they, is it getting to a point where valuation starts to become attractive? Maybe, but the story is still ugly. I mean, MGM's valuation, it's probably not been that bad for a while here now, but it's been straight down in 2018. I mean, we were $38 earlier in January. Now we're $28. Is it cheap enough to pull the trigger? Maybe, but the trend is still not your friend. And I don't see anything like imminent here that's like, okay, I think the tide has turned. I don't see it here. Not in this MGM chart, not in this Las Vegas Sands chart. I mean, Las Vegas Sands looks like it wants to go lower yet. And Wynn Resorts, we're just kind of hanging here. We had the big sell-off. Now you get the little bounce, but now you're getting some more pressure here again. So I think the story still has more to play out here to potentially to the downside.
All right, moving on. Let's go to Rio Tinto is one that I want to say we discussed a couple of days ago. Maybe that was on the pre-market show, or I don't remember. But they had a couple of headlines yesterday.
Was it earnings or something? It's down 2% here.
Yesterday they said they're considering a public listing of its Canadian iron ore business. That was from Reuters. That was yesterday morning.
I mean, okay, so you got the miner here. This is just they're in the wrong sector. And the sector has just been out of favor. We've talked about it for a while. So it's not surprising our IO has been weak here too. I mean, it's a stock that usually isn't that wild. So, well, actually can get wild, I guess. But as of late, it really hasn't been. It's been kind of quiet. But now you're breaking through the 50 support. So I look below and I think, okay, the next major support area I see is like 46.5, where you had a bunch of bottoms in 2017. So that's 3 points lower here. So again, if you're coming in here now, I feel like you're a little bit early. It's trading. Remember, this is trading as an ADR. It's trading actively over in Europe right now. So it's not like it's trading down here on just light volume. This is fully open over in Europe right now. So it's trading with your tight market, 49.24 to 49.28. So they're pricing this already in. So it's not in the price discovery phase. You know, you come in at 8 o'clock in the morning, you think, oh, it's just pre-market action. What does it mean? When it's an ADR, it's not pre-market action. It's action that's happening over in the open market in Europe. So this is pricing in now. It's down 2%, probably trading very actively over there. And what you're seeing is just high-frequency traders making a market around where the fair value is with the exchange rate over in Europe. So it's basically priced in a lot of the information right now. It's got a nice dividend of 6.26%. I don't follow the story close enough to say if that dividend is safe or not. When they start getting up over 5-6%, you always say, how safe can it be? I mean, if it was perfectly safe, everybody would be diving in there because it's a lot better than a bond. So it's obviously not perfectly safe, that dividend. I think there's could be some more pain below. I see some room to 46 to 47.
All right. Here's one that's just about at all-time highs. Fastenal. This one has just been...
Oh, I'm kicking myself so much on this because I wanted to buy this stock when it got back down into the 40s. Late since 2017, I wanted to pull the trigger. It actually got down to 39.79. It had like a 4% dividend on there. This is the nuts and bolts of the market, literally. This is what they make, nuts and bolts pretty much. It's the stuff that fastens stuff in your construction companies. I mean, it's always been a good buy on pullbacks. It's not. Now it's ripped. I mean, now it's straight up here. I loved it. Look to the chart. Bring up like a 10-year chart on this thing.
Yeah.
So many times it's been up in the 50s and comes back into the 40s. It's like range bound. But the only thing is you're starting to get to the upper end of that range and you're looking like it could potentially break out. So I don't know if I'm shorting it up here. I'm probably not buying it though, because it's given you lots of chances before. It's been in the 40s over the last 7 or 8 years. It's been in the 40s, probably from the 50s to the 40s, probably 30 or 40 times. It's got over the 50s and then came back down to the 40s. Is it going to do it again? Maybe, or maybe it's just been range bound for 5 or 6 years and it's going to break out. So I'm not sure if you're going to get a chance here back in the 40s again. If you do, I'm going to have to pull the trigger, I think, next time. But I mean, the stock looks like it could potentially break out. Trend is your friend. I can't argue with you if you're long. I think if you're coming in here as initiating a position, I think you're a little late to the party because it's been a pretty big move, especially since July when the stock was $48.
All right, we haven't really talked solar in a while. Someone asking about Sunrun. They had earnings yesterday after the close. Q2 GAAP EPS of 6 cents, not comparable to the 25-cent estimate. Sales 170.5 versus 167 $1 million. So a slight beat on that number. They expect deployments to grow for this current quarter 15% on a year-over-year basis.
Stocks had a big run this year. It went from $6 at the beginning of the year up to over 16. And now you look at it and it's kind of starting to leak, and now obviously significantly leaking on this report. I think you now have overhead supply issue here. As the stock gets back up into the 13 handle, I think you have sellers all over the place here. A lot of people buying it in the last month and a half above 14. Those people probably become natural sellers. So I think I'm looking at this as more of a sell the rip as opposed to buy the dip.
All right, and
jump over.
Yep.
There's a lot of stocks in the chat there. You can keep going if you want to keep taking lady. I know you're just pounding through the list, so keep going, Spencer. And we'll
all
keep
right, so we just got. All right, Match. Let's talk about Match since we did talk about them yesterday.
Yeah, and I've got egg on my face here because this is a 46, and I was like, I don't know. I was saying that I don't like to own any stock that Facebook is coming to their space. Doesn't seem to matter right now. It's hot. The hot story continues here. It's moved up, had a big run yesterday, up to almost $50. And you can tell how those big psychological levels come into play. Got to 49.98. Can't get any closer there. There's probably a big seller at the point up there at 50. So if we can take that out, I guess the run continues. But right now, that's your next major resistance level. Again, I don't like it, the story, because I think Facebook is coming into space here eventually. Stuff doesn't naturally have to play out in one day. It wasn't like a day trade call I'm making. It's a longer term call. And I think when I look at this a year from now, I think it's under $40, my opinion. But they're saying short interest, and the short interest is another consideration. RD, yeah, it's 50% short interest. So that might put a hole in your thesis. I don't like being short stocks that have 50% short interest because those guys get squeezed. That's what you're seeing here right now. You probably have a lot of people, maybe with that opinion that I had, that Facebook's coming to this space. It's got to come back down. Stock doesn't have to do anything. With that huge short interest, it's hard for the stock to go down. So maybe you got to blow out those shorts some more. So maybe it does move higher here because of that. So that's a major consideration. I did not know at a 50% short interest. So if that information is correct, makes it a tougher case to short it.
Getting a question. I guess this is a
Matt Beyond's been asking about Micron for 2 days.
Okay.
Okay. We better get him.
All right.
Get Micron. I added to my Micron position. It's a mistake,
Really?
Obviously. I bought it more at 53 just a few days ago. It's at 51 here now. I still like it from a valuation perspective. The chart doesn't look great. So this is in my long-term retirement account. Not going to look at it. Just stuck it in there and not looking at it. So it's not a trade. As a trade, it does not look great. I mean, it looks kind of heavy. The chip story is kind of broken. It almost looks like it's got a head and shoulders going. It looks like it could go weaker. It's a valuation play. I know it's cyclical, and the crazy earnings that they got right now won't hold up, but I think it's still got, even in a downturn, it's still got a lot of money that this company makes. So I like it long-term in my long-term retirement account. Short-term, it looks kind of broken. It looks like it wants to test 50. So I think it's going to test 50 again.
When you're measuring valuation, what ratios do you use?
You can look at a lot of things. Like the first thing you look at is the PE. I mean, what's the PE on the thing?
Yeah.
But then you got to look at, okay, well, what's the growth rate? So, if you're buying a stock that's got a PE of 6, but it's not growing at all, or earnings are declining, well, that means the PE is going to come up eventually. So you can't just take a PE of 6 and say, I'm going to buy every stock that's got a PE of 6. Maybe there's going to be, an earnings decline. I mean, if I looked at AT&T, go grab the PE on AT&T. I mean, if I was just a pure value, I'd be like loading up on AT&T, but I'm not, because I think my thesis is, and I try to understand the business a little bit too. I think it's competitive. I think they're in a very competitive business. I think they've done some very poor acquisitions.
6.3.
I think they're laden with debt. What's the PE on AT&T?
6.35.
Yeah, so perfect example. So if I was just a PE and the only looking valuation just PEs, you'd say, well, 6% dividend, 6.5 PE, what's not to like? Buy. No, that's not the way I look at it. I look at it as, okay, well, you got a 6% dividend. That is nice. And I own some AT&T on my investment portfolio.
Who doesn't?
I've been talking about selling it for a while. I've been talking about selling. I've had it in there for like 15 years. But I'm talking about selling it because I don't want this to GE me. And I think it could. I think this has the potential to GE me. And what I mean by that is GE was a huge value trap. It had a nice dividend of $30 too, and they cut it. They cut it again, and obviously the debt that they laden themselves with just became too much for the company to handle. And I think AT&T has done a little bit of the same thing. They keep taking on a lot of debt, trying to grow the business in whatever way they can, and they're doing bad investments. I mean, maybe Time Warner is going to be a better one, but that DirecTV investment was awful for them. I mean, that because you've seen what Dish has done since then. Here you're buying, a satellite TV provider when Netflix and everything is eating their lunch. So, I mean, that was just a terrible investment for them. They've done some poor decisions. They got a hell of a lot of debt going on here right now. There's a good argument, that this is a value trap. And that's why, so you can't just look at high dividend, low PE, natural, buy it. You've got to look at what the story is. And when I look at the story of AT&T, yes, it could come back. Yes, I might be wrong with this thesis, but I don't think that dividend is safe. And I think the debt could become a major issue for them going forward, especially in a competitive environment. I mean, sure, cell phones aren't going away, but it sure is competitive. Some of these rates, some of these other companies that are coming in there are giving you some pretty competitive rates out there. So rate shoppers, AT&T could be, get those margins squeezed a little bit more and start squeezing those margins a little bit more. That PE won't look so good.
All right, I'm just seeing a tweet now from Trump. He just authorized a doubling of tariffs on steel and aluminum with respect to Turkey. Then he goes on about Turkey, but he just authorized a doubling of steel and aluminum tariffs.
The trade war continues.
Yeah, 20% on aluminum, 50% on steel.
Okay, and we're looking here this morning. I see really muted activity. It's so funny here now. I mean, these stocks used to trade so wildly on these, this trade war headlines there. When Trump would tweet something, you'd see, boom, S&P start flush because of trade wars. I mean, the market's just kind of shrugging it off now. We hardly even moved. I wouldn't even known that headline broke unless you just told me there, because I don't see anything. I don't see any real reaction even in the steel stocks.
Yeah, I know. I was looking. Well, I saw OK Steel a little bit, but that was earlier.
A little bit, but I mean, you think, okay, well, tariffs going to come in, try to protect our U.S. steel companies there. It's going to be a big rip, and there was before. And U.S. Steel just cannot catch a bid. I mean, you want to talk about a stock that is in a downturn here. Holy cow, stock, since that earnings report, since they came out with big numbers, beat on the top, beat on the bottom, raised guidance, you think they're doing everything right. Stock's trading up at like $40 after hours. It's been straight down to 30 2 weeks later. And that's just catching people, just trading on the numbers, saying, well, those are good numbers, got to come back. Stock doesn't have to do anything. Sentiment trumps numbers every single time, at least in this market. So it's all a matter of like how people are viewing a stock. It's so much more important than, the numbers themselves. And I know that sounds, ridiculous sometimes, to say that, but a lot of times you can say, look at these numbers and say, well, if that stock pulls back, I don't care how bad the numbers are. It's just loved right now. It's probably going to go higher. So that's always the consideration when you're, looking at something. Talk about, how is the stock being viewed going into it? Is it in an uptrend? Is it loved by the market? And, is it too loved? Has it ran too far? That's a different case. But I mean, in a lot of these cases here, stocks are just, some are just loved. And if it's got a good story, even if it has a disappointing report, you'll find that underneath demand. If it's the other case where, it's got a bad story and it gets a pop on, a relief rally or something, or a good number, you still have that overhead supply issue. So sentiment matters. And, that's something that a lot of investors don't consider enough. And how do you gauge sentiment? You can feel it out. So, the easiest way is the chart. I mean, if the stock's on a hard downtrend, it's obviously not loved by the market right now. So, and you can identify turns, and there's turning points where you can play these things. Even stocks are in downtrends. There's sometimes, buyable opportunities there where a stock might make a double bottom or start to look and perk up a little bit there on the chart. But I mean, overall, stocks are in downtrends and they have, earnings spikes, they tend to get sold. Stocks that are in uptrends that have earnings drops tend to get bought.
Yeah, and there are, a million ways to measure sentiment, but just look at the chart, right? I mean,
it's the easiest, simplest way.
Right.
And then you can just start looking, how's the story? How's, the media portraying something? And, sometimes it can be the contrarian. Like, I mean, Tesla's absolutely getting hated by the media. Had that New York Post article, coming out that's saying Musk was a fraud, 285. And here you got the short interest going, so you could say, oh, well, sentiment is really, actually it's just gotten too sour. I mean, sometimes when something gets too sour towards something and everybody is bearish, it has nowhere to go but up. Because, you got the shorts increasing their positions. They're feeling good about themselves. They're winning. Every short that was reading that New York Post article when Tesla was 285 was loving their life. And now they're puking their guts out, as the thing's up at 350 with a potential 420 bid on the shelf. So, I mean, you've got to understand, how media is too. And sometimes you can take the contrarian, perspective there. It sometimes works, but you just get an overall feel. Like, and that's why, I think I'm successful in my trading because I pick on the same, 50 stocks all the time. Like if I look at the stocks I trade every single day, I'm trading Apple all the time. I trade stocks like Coca-Cola all the time. I trade stocks like ExxonMobil all the time. Why? Because I got the liquidity, but I've also got a feel for those. Don Bright passed away 4 years ago. He was one of the, his Bob Bright, who started Bright Trading, obviously, he's his brother. And Don used to say, he used to teach traders, and Don was a great teacher. So many, and shout out to any Bright traders who are out there listening to the show right now. But I learned a lot from Don over the years. Working along with him for 16 years when he was with Bright Trading, he did some great education. Some of these strategies came up with were really good. And he'd always say, when you're first starting, he's teaching newer traders. He'd find 5 stocks, watch them close, feel them out. Let them become like your children, like you understand, how these stocks go. And just focus on trading those 5 stocks, like day trading those 5 stocks. And it's funny, when you trade the same stock day in, day out, you get such a good feel for it. And when there's an outlier move, you'll be like, I don't feel that, because you're in the zone. You're in the zone with that stock. And that's what it is. It's about trading is about getting in the mental zone. And when you're trying to trade every single mover, every single day, and you're all over the place trying to trade this stock, this stock, this stock, this stock, this stock, you're not in the zone on any stock. You're just scrambling around. It's difficult to really get in the trading zone with that. But by me trading, Coca-Cola almost every single day, I kind of get in the zone with it. I don't even have to bring up the Coke chart to see what it looks like because I know what it looks like. I look at the chart all the time. So, I know how Coke trades. I know it trades more defensive. I know on a day like this, with Coca-Cola, and I'm long Coca-Cola right now, buying the pullbacks here, just even this morning, just as a day trade. These are day trades. I know on a day like this that Coca-Cola will actually tend to rise. People say, oh, sell everything. We're down. We got to sell Coke. On a day like this, Coca-Cola actually tends to do better. And I just know that because I trade all the time. And, maybe it's, logic, it's defensive. But, sometimes there's sometimes where a market is just weak and everything is weak. But that's not the case right now. Coca-Cola has been in a pretty good uptrend. It's consolidated here above 46 for a while. It's a stock that I've just got a feel for. And if you trade the same, 30, 40, 50 stocks, again and again and again, you start to get a real good feel for them and how they trade with each other. So I think that's why, I've been successful. The discipline's the number one thing that's kept me in the game for 19 years. But the other thing is I don't try to just trade everything. I try to trade what I have a feel for. So if everybody asks me opinions on stocks, just because I give an opinion doesn't mean I'm going to go trade it. Most of the time when I'm talking on the show, I'm probably not trading those stocks. My go-to stocks are Johnson & Johnson, Procter & Gamble, ExxonMobil, Apple, Ford. I'll even trade. You can trade in more size. The banks I trade all the time. Bank of America, JP Morgan, Morgan Stanley. Why? Because they're consistent with each other. Like coming in, if Bank of America is down 1.5%, JP Morgan's probably going to be down the same. Look right now. In the pre-market, Bank of America is down 1.17%, JP Morgan is down 1.19%. I know that's a little bit out because JP Morgan has a beta a little bit less than Bank of America. So I can already see, a little opportunity there because Bank of America is usually down a little bit more than JP Morgan. That's not happening there right now. So maybe I want to go and try to extract some statistical alpha from that of like 0.2%. And I will enter a trade on some of these trades for literally 0.1%, 0.2%. Maybe call it picking up nickels in front of a bulldozer, but I'm pretty good at dodging that bulldozer after 15 years. But that's the main point I'm trying to make is if you're just starting trading, don't try to trade the biggest movers. Don't try to go sit down at the table and play at the poker table and trade against, the best poker players in the world. Sit down, get some stocks, get some liquidity, stuff you can get in and out of easy. Feel them out, learn by trading, more liquid stocks. And then, start to get a feel for them. And then, all of a sudden you start to get an edge. And once you have that edge, you can actually start to make money. So, that's the one tip I give to new traders is pick on the stocks you understand.
There are a couple more stocks we can get to in the chat real fast. AWX, this is one we probably wouldn't normally discuss. It is a low floater. It's got 3.19 million shares outstanding. And
what stock?
AWX.
Oh, yeah. So this is one of those other
but they did have earnings. So I'm bringing up because they had earnings. 42% of the shares are sold short. But I mentioned the earnings yesterday after the bell. The Q2 EPS, 16 cents, up from 3 cents a year ago. Sales 16.7 versus $14.5 million year over year. So they did beat on the earnings. It is the catalyst this morning. Do you have any comments? I
made a great call on this thing when you guys brought this up, and I did not trade this thing at all. And this is a hard stock to trade.
Yeah.
But this was trading at $28 on that big spike up. You say with $28, what are you talking about? And the pre-market was like 35 on July 30th. It was up at 28, and somebody was asking me a question. I said, I have no idea where this thing is going short term. But I said, when I look at this thing a month or two from now, I think it's under $5. 3 days later, it was under $5 from 28 to 5. So, that's just knowing that these spikes tend to be short-lived. I don't know where the top of it is. So I wasn't coming in there shorting it because I don't know where the thing's going to top out. Maybe it's going to top out at 20. Maybe it's going to top out at 28. Maybe it's going to top out at 100. I don't know. So it's hard to just come in here and short it. Plus, the locate was an issue, I think, for the AWX. But again, now you got an overhead supply issue on this thing. So is this thing going back to $5, $10, $20? I think no way. No way, in my opinion. I think the spike gets sold. So I think you're going to struggle even to get over $5 because a lot of times that's where stocks become marginable on a lot of accounts, and that's where you run into big resistances up to 5. So I don't know where it's when pre-market. I haven't even looked at this chart. Where is it when pre-market? But I would say $5 is probably going to be a wall of resistance.
Well, right now we're at 450.
Where do you have a pre-market chart though, or after hours chart? Did it get to 5?
No, 487.
Oh, yeah, right there, $5, 487. So that's the line in the sand. I think it's going to struggle here. If I was long this thing, I'd probably be selling it. I think when I look at this thing, I'll say it again. This thing's 437 right now. I think when I look at this thing 3 weeks from now, I think it's under $2, or it's back to $2. Where was it when it was all consolidated? I'll say it's under $3.
Where was it?
So I think when I look at this thing 2 weeks from now, it's under $3.
All right.
But I can't tell you where it's going to go. Short term, it could go 5, 6, could go anywhere. I mean, the locate's even hard on this thing. But this is a hard stock to trade. People are naturally I've seen a lot of traders here.
Mm-hmm.
It's just experience is all it is. I mean, that's all it is screen time. They say you're a master of your trade when you've done 10,000 hours. So that's 2,000 hours times 5 years. So that's when they say you've actually mastered your trade. I have been doing trading for probably more than 2,000 hours a year because I trade after hours pre-market. I probably put almost 2,500 hours in a year for 20 years. So I feel like I'm not saying I'm a master of it, but that's what the textbook would say is, you've done it for so long. I'm saying I'm pretty damn good at it. And I've seen this story again play out again and again and again. You see all the new traders, in break trading, we had the office in Detroit. We had 400 traders in our firm at one time. You see traders come, they just have to rate their exams, and fund their account. I would see traders come in, and naturally the first thing they want to trade is stuff that is moving. They want to go in the stock that's up 50%. They want to go to the crazy stocks. I'll tell you, out of all those traders, 9 out of 10 of those traders aren't there a year later. It's the traders. I can almost identify the trader that's going to be successful within 20 minutes of meeting them. And why? Because they have these, they have discipline. They look at the trade not on trying to get rich fast. It's all about getting rich slow. It's all about learning, how to trade. First of all, learn. These stocks are wild. I don't sit down and trade this AWX. This is almost like gambling. Mm-hmm. I mean, can I make good calls on this? Could I make money on this if I traded consistently? Probably, because I've been trading for 20 years. But it's not easy. It's not easy to predict. That's all really, trading is. It's making little calls and making predictions. And I'm all about, statistics, knowing, okay, stock gets upgraded by Goldman or stock gets upgraded by Morgan. What is that worth? All this different stuff. I've traded with a statistical edge, but I've built that edge over time. Again, but I've always traded more boring stocks. And, when I talk about Coke on the show, it probably turns a lot of people off. Why is this guy talking about Coke again? You want to know why? Because I probably make money on Coke 4 out of 5 days every single year. And I think if more traders traded stocks like Coke, they would make more money. I can get in and out of it within a nickel, sometimes, or within a penny, sometimes within the spread, because you can use, you can go midpoints and stuff. So I can get within half a cent. So I'm almost paying no spread at all. It's easy to get in and out of, and it's more predictable. So it's those kind of stocks that I see more successful traders, trading. And not saying you have to go trade Coke, but trade something that is not completely moving up 50% in a day or down 50% in a day. If you want to be a Tesla trader, it's way more consistent to trade something like Tesla. It's a little more not that it's predictable right now. It's pretty wild too. And I'm not a big Tesla trader, but Tesla's going to be a lot easier to trade than a stock like AWX. So everybody wants to get rich fast. They want to know how to get rich fast. If we were running a get rich fast show, we'd probably have a lot more listeners, but we're trying to teach traders to trade long term. We're trying to teach traders, to do this as a career, and try to help those investors out there as well, to invest a little bit better. Stuff like AWX, guys, is gambling.
All right. And on that note, we are going to wrap it up for the week. That was an excellent way to wrap the show. So thanks to everyone who joined us today, and you were joined us in our chats as well. Those of you on YouTube and premarket.benzinga.com, we very, very much appreciate your continued support of our show. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google, or just rewatch the show on YouTube and see our pretty faces there. Want to remind you folks that all the information presented on today's show is for informational purposes only and not meant to be investing advice. And that is going to be it. So hope you all have had a good week. Hope you all have a good rest of your Friday and a good weekend. And we will see you guys back with Joel on Monday.